What's going on, investing family? You're listening to the Stock Market Tour Guide podcast, where I help you navigate the uncertain world that is the stock market. I'm your host, Stock Market Jay, and I'm here to save the day, bringing you the news you can use with regular fundamental analysis, insights, helpful tools, and strategies. All right, guys. So, as a disclaimer, I have to let everyone know I'm not a financial advisor, and this isn't financial advice. Um, I am, however, a fundamental long-term investor who believes in proper education to properly alleviate risk. Right. Um, the name of the game is risk aversion, people, and you can only do that with proper education. When you truly know how to play the game, that's when you can win the game, right? And investing world, the markets are a game of it's a game of numbers. Um, you make your money when you buy, not when you sell. Don't get me wrong, you take profits when you sell, but if you buy in at an inflated price, or you end up losing money in an investment, it's no way you can take profits, right? But if you buy in at an undervalued price, then that's when those profits are really seen, right? So you make your money when you buy, not when you sell. Um, so today, I just want to tell all my people that's going to be tuning in on YouTube, please subscribe, like, share, comment, um, and just really so you can get the best portion of education that I can possibly give you. Right, you can get the most education that you possibly can. That's the name of the game, right? Tune in to stay educated, to get educated, right? Um, because that's how you truly win this game of investing. It's by way of education. I listen to Yahoo Finance, or watch and listen to Yahoo Finance about 2 hours a day, along with about another 4 or 5 YouTube channels, and then of course I just have newsletters or whatever that I read, maybe 4 or 5 a day. It's all about education, guys. It's all about education, and that's actually going to be the topic of the day. It's going to be education and risk aversion, right? And just a little market sentiment going around right now. The name of the game is going to be properly educating yourself in order to achieve the highest results in the stock market. Stocks are more than just a number, people. You have to understand that stocks are businesses that you are an owner of, and you need to understand if this is a good, strong, wonderful business that you're looking to invest in, um, or is this just a speculative play and you're just gambling, right? A lot of people are gamblers. A lot of people are speculators and gamblers. They're not investors. Real investors understand the fundamental aspect of investing, right? As well as you have to understand economics, the economic portion of it too. And then you have to have the emotional fortitude, the emotional intelligence to be able to withstand that roller coaster ride that is the stock market. Um, so we understand that you have to understand business, right? Um, Business is definitely going to be a major aspect because, I mean, like I said, you're investing in companies. You're not investing in numbers that are on the app, right? You're investing in companies. So your dollar is going to go as far as this company goes, or whatever company you choose to invest in. If you invest in a good, strong company that actually grows year over year, then you can it's guaranteed that your investment and your capital will continue to grow year over year. That's guaranteed. It's been proven over the years with some of these big, strong, wonderful companies that have been around for years, right? The blue chip stocks, a lot of your large cap stocks or your mega cap stocks. Those are going to be your companies that are just like phenomenal growers, right? They're phenomenal growers of business and expanding of businesses, right? Um, Understanding the economics of the stock market is going to be more so. It's going to be more so. How does the things that are going on in the economy? How is it going to affect the business that I'm investing in, or the markets as a whole? Um, the June jobs report came in here recently, last week, this past week, and jobs were more. There were more jobs than there were expected, but it affected the markets to the downside because the markets think ahead. As a fundamental investor, you have to think ahead too. That's why when you evaluate these companies or you do your fundamental research, you want to do your research on the past, but you also want to take a look into what the company is looking to do in the future, right? Um, just like the markets do. So the June jobs report came out and it affected the markets to the downside. Here's why: because there were more jobs created than that was expected. Don't get me wrong, job creation and job growth and employment growth did slow a bit, but here's the thing: it was still job growth. What that means is job growth means more employment, means more liquidity into the markets, okay? More liquidity into the economy. If there are more jobs, then that means more people are making money. If more people are making money, that means more people are spending money. Well, during high inflationary times, more liquidity into the markets mean higher inflation, okay? And higher inflation is not what we need in our already high inflationary economy. So that what has to happen is the Federal Reserve has to implement that quantitative tightening and pull some of that liquidity out of the markets by way of interest rate hikes. So with knowing this information, knowing that, okay, June jobs report came in hot, there were more jobs created than expected. There's more liquidity into the markets that's going to be coming here shortly. So the markets are factoring that in. They're baking that into these stock prices that, hey, interest rates will be rising here shortly whenever the Federal Reserve meets again, and then they impose rate hikes, or if they decide to just level out and stay the same until they meet again in the next month thereafter. So the markets already see it coming though. The business and the economy, they kind of move hand in hand. When the economy is in a downturn or a contraction, businesses tend to feel it first. Real estate won't feel it first. Um, the consumer won't feel it first. The businesses feel it first, and then that trickles down to the consumer, right? Um, and that's how it works. So understanding that, and you'll understand why the June jobs report affected the markets to the downside, because the markets are looking ahead, right? They're looking ahead to what's to come, and what's to come is going to be interest rate hikes, and right, and what's to come is going to be a quantitative tightening, right? What's to come is going to be higher inflation. That's what the markets have the foresight, the gift of foresight to see. And as an investor, as a fundamental investor, you need that same foresight. The CPI, the Consumer Price Index, is coming out next week. That will affect the markets. It will. Knowing how far the consumer's dollar is going, or how far it isn't going, because what the Consumer Price Index does, it shows where the dollar's being spent at, what areas. Is it hospitality? Is it travel? Is it food? Is it consumer discretionary? Where is it being sent? Where is that dollar being spent at? Okay. So understanding these things, you know that good news can be bad news, and bad news can be good news. You have to understand this thing. More job growth is good for an economy, but it's not good for an economy that is looking to slow down, a slowing economy, right? That's what the Fed wants to do. They want to slow it down. They don't want to halt growth, because that's where recessions come in at. They don't want negative growth, but they do want to slow the growth that we're already experiencing, right? And because the Fed has to do a balance in that. Understanding this, you will know that, hey, stocks are down today because of this June jobs report, because they're factoring in and they're baking into these stock prices what's to come. That's the emotional roller coaster ride, okay? Like I said, that good news, which is more jobs, more employment, right? That's good news. But looking ahead for the stock market and for business, that's going to be bad news. It affected the markets to the downside. You have to be able to ride that emotional roller coaster ride. You need that emotional fortitude to be able to ride that ride. Um, who knows how the consumer price index will report? And when it does, it could be seen as bad news in the markets. It could be seen as good news in the markets. You might get a little bit of a rally, or you might just get more downside like we've been experiencing, right? And that's what the markets have been here lately. This past week we did experience a lot of green days, with the exception of Friday, and the markets were actually down then. That's because of the June jobs report. We have the PPI, the producer price index, coming out next week as well, which is going to shed a little light on how the producer is doing in this type of economy. The people that are making these goods, right, to sell to the consumer. That'll affect the markets in a positive or a negative manner. You have to understand, like I said, business. You have to understand economics to a degree. It can be simple economics, but you have to understand this is the game that you play in fundamental investing, not in options. You don't have to understand these things in options. You don't have to understand these things in technical analysis. It's more of a trends and charts and graphs and those forms of investing. But don't get me wrong, with proper education, they can have a level of safety and practicality, but fundamental investing over the long term is going to be the safest way that you can possibly invest. And just understanding that these companies, you're growing with these companies, right? Over time. Nike wasn't as big as it was today, 30 years ago. It's grown into what it is today. Apple isn't as big as it is today. It wasn't as big as it is today 15 years ago. It's grown into what it is today, right? The company has continued to grow year over year into where it is today. And understanding these things, understanding good fundamental businesses, you're able to invest into these companies and stay invested. You're able to invest in them when they're young companies because you can see it. You can see the growth and the development in these companies because it's there in the numbers. The numbers don't lie. That's what fundamental investing is. It's understanding the numbers. I see that this company is beating and growing earnings every quarter. I see that this company is growing revenue. I see in this company is growing net income. I see this company is growing free cash flow. I see this company is starting to pay and growing its dividends. That's how you understand what a good, strong business is, okay? This company is growing 10% a year. The company is growing 7% a year. Well, guess what? Your money is going to grow right in step with that over time, you know? And people have to understand that when you can evaluate a company and its business fundamentals at its core, you give your chance the best. You give yourself the best chance to succeed in the long term, which is what wealth building is, which is what fundamental investing is, right? It's investing over the long term. People have to understand the difference between short term noise and a long term issue. Some companies can't bounce back from a long-term issue. Some of them don't have enough cash to do it. Some of them don't have the brand, the following, or the moat to do it. They'll end up getting swallowed up by another company, someone to come in and compete, and then they'll just be obsolete at that point. That's how that works. But a little short-term noise, it never hurt a strong company. Every company has had some short-term noise, whether it was something with the CEO, maybe they didn't follow through on some promises. Maybe it was like a health scare at Chipotle with the E. coli. Maybe it was a little tightening that Nike felt back in 2018, 2017, when other competitors started rising, and they ended up having to really readjust their business model to the digital space and the e-commerce space, which is the world has subsequently kind of went to. During COVID, right? Everything was online e-commerce. They were just kind of ahead of the game because they had a little bit of short-term noise where they had to cut out the middleman, which was the stores that they were putting their products in, the Foot Lockers, the Foot Action, the Champs, things like that. So that was cutting into their profits and their margins. So what they started doing is selling directly to consumers online. That solved the problem. You want to invest in companies that are able to solve problems, right? And that can take short-term noise and turn it into a long-term benefit to their brand and to their company, right? But the company has to be strong enough to be able to do that. The company has to have the cash to, one, be able to do that. They have to have the brand and the recognition to be able to do that. They have to have the strong management team to be able to do that. They have to have a track record of growth to continue to be able to do that, because right now, during this time of economic uncertainty and during this time of contraction, good, strong, healthy businesses are still growing right now. They are. Earnings are coming out here, coming up. Earnings have been coming out, and guess what? The strong companies have been crushing earnings. The strong companies haven't been missing earnings, or like their guidances haven't been thrown off or anything like that. Don't get me wrong, they all are saying the same things right now. Due to supply chain restraints, and it's harder to get products in, and everyone is singing to the same tune. But here's the difference: the strong companies, the wonderful companies, are still growing. So their tune is a little bit different. Their tune is a little bit different. They have a sweeter sound that they're singing right now, right? And you have to understand that as an investor. As an investor, you have to be an investor of business. As an investor, you have to be emotionally intelligent enough, emotionally fortified enough to understand that when things happen in the economy, the business that you're investing in will withstand the test of time, and it will continue to grow, because that's what good businesses do. They grow. And it's our job to grow with them, right? So just understand that the markets are a scary place when you're speculating, right? The markets are a scary place when you're gambling, right? And that's why I'm here. That's why the Stock Market Tour Guide is here to help. Okay, I'm here to help everyone navigate the uncertain world. It is the stock market. The stock market is an uncertain world, and it will take a level of navigating through that world, and that can only come with proper education. That's why this is an education platform. I preach education. You can't win the game until you know how to play, and that comes with proper education. A lot of people want to invest, but a lot of people don't want to do the work necessary in order to properly invest, right? If that's the case, just go buy a bunch of scratch-offs and just go gamble your life away. But if you want to do this the right way, keep tuning in. Like, subscribe, follow me on Facebook, Justin Lamar. Follow me on Instagram, Stock Market J. Follow me on YouTube, Stock Market J. Subscribe to my YouTube. Tune in daily and regularly for this content so you can learn how to play the game. That's how you win, people. The world of fundamental investing doesn't have to be a scary place. It can be a beautiful place as you like it to be. I outpace the markets regularly. I believe I did it like 3 times last week. It's easy now at this point. I'm the major indexes, the Dow Jones, the S&P 500, the Nasdaq. I'm blowing them out of the water week in and week out. Has nothing. They have nothing on me. Why? Because I've educated myself to the point where I'm able to do that. Okay, proper education and proper planning beats poor performance. A lot of people have poor performance right now because they're not educated in the space of fundamental investing. You have to understand that stocks are more than a number, and I want to help America invest again. All right, guys? I'm Stock Market Jay, and I'm here to save the day. Until next time, everybody, peace.